You paid an extra tax last month. You didn't fill out a form for it. You didn't vote on it. It came out automatically, and last month alone it took more than your federal income tax did. The Bureau of Labor Statistics published the receipt on June 10th. Nobody called it a tax. They called it a number, a percentage, a monthly update. Whatever you want to call it, it came out of your paycheck. And it's been doing this every month since you started working. Two things are going to happen in the next 6 minutes. First, I'm going to show you the machine that took the money. Second, I'm going to show you that the number on the receipt, 4.2%, is the best case, the polite version, the optimistic estimate. The real number is bigger, and the methodology that calculates it is engineered to keep it small. Both things together explain why your paycheck got a raise this year, and your life got more expensive. Picture a machine. It sits under the floor of the country's economy. Every dollar in circulation, every single one, runs over a conveyor belt that passes through this machine. The machine takes one thin slice off each dollar as it goes by. Not a chunk, a shaving, so thin you can't see it. But the dollar that comes out the other side still says $1. It just buys less. That's the skim. That's the tax. Here's how it works. The federal government spends more than it takes in every year. To cover the gap, it borrows trillions of dollars in debt. Most of that debt eventually gets supported, directly or indirectly, by the central bank. The central bank does this by creating new dollars, not printing them physically, creating them electronically, adding zeros to a ledger. Those new dollars enter the economy. They join the dollars that were already there. But the economy didn't make more stuff that month. The amount of stuff is the same. The amount of dollars chasing it is bigger. Every dollar that was already in your wallet just got diluted, including the ones you earned. Here's the part that's hard to wrap your head around. The skim doesn't come out of your account. It comes out of your dollar, the dollar in your pocket, the one you already earned. The skim runs on dollars that exist. Last month, it ran on every dollar in America. Savings, checking, paychecks, retirement accounts, the 20 in your kid's birthday card. It took a slice from every single one. And then the next month, it did it again. That's the skim, mechanically. The government spent, the central bank financed, your dollar shrunk. Nobody filed a form. Nobody voted. The mechanism is the receipt. Last year, the average American worker got a 3.6% raise. Prices went up 3.8%. USAFacts confirmed it last month. Wages have trailed inflation in every single month since April. The raise was real. The poorer was also real. Both happened at the same time to the same person on the same paycheck. Your boss gave you a raise. The skimmer took more. Here's the part nobody talks about. You know your tax bracket, 12%, 22, maybe 32. That number is on your W-2. You can look it up. That's the visible tax, the one you signed off on by voting for the people who voted for the rate. The skim is on top of that, and for most workers, the skim is bigger than the bracket. That's the math the receipt doesn't show, and the receipt understates it. That 4.2% number from the Bureau of Labor Statistics, it's not just a measurement, it's a measurement with a method, and the method has rules. One of those rules is called hedonic adjustment. Here's how it works. You bought a phone last year. The same phone costs 30% more this year. The Bureau looks at it and says, wait, this year's phone has a better camera, more storage, a faster chip. So the official methodology says, okay, the price went up 30%, but the phone is 30% better. Therefore, and this is the part, the real price didn't go up at all. In some categories, it went down. You paid more. The data says you didn't. Multiply that across every product the Bureau tracks. Cars, TVs, computers, washing machines, internet plans. Every time a product gets better, the price increase gets adjusted down. Stack enough of these adjustments and you get a meaningful gap between what the receipt says inflation did and what the grocery cart says inflation did. The receipt is engineered. The grocery cart is honest. There's also something called basket substitution. If beef gets expensive, the methodology assumes you switch to chicken. There's something called owner's equivalent rent that estimates housing costs from a survey of homeowners about what they'd rent their own house for. But the cleanest example is the phone. Brookings ran the numbers in April. For the first time since 2022, real wages went down. Not slowed, not flatlined, down. The visible rate is the polite rate. The felt rate is bigger. The methodology is engineered to keep the visible numbers small. The dial on the machine is calibrated by the same people who own the machine. So here's where we are. Every month, a machine you can't see, that nobody voted on, takes a slice off every dollar you've ever earned. The line for it doesn't appear on your tax return. The percentage they tell you understates what it actually does. And it ran more than your federal income tax did last month. The receipt doesn't have a line for it, so somebody should add one. The skim came out automatically last month. It'll come out automatically next month. It came out the month before you ever heard the word inflation. That's the tax nobody voted for.